If you have any questions, you can post in the chat. I will be the only one to see those questions, so I won't call out names or anything unless you're wanting me to. So it's 8 o'clock. Welcome. Thank you for showing up. And it's probably an hour or so, depending on the questions. I'm definitely going to show you a lot. It's all 100% free. Some of you already have this indicator and you're on your way to making money with it. And I went through and I just kind of marked where I would have traded. And I'm going to go over each trade and show you how it works. This indicator is called the SpyBot Ranger. And the Ranger, what it is a open range breakout indicator. And how it works is it goes by your previous, or not previous, but your pre-market. And it goes by yesterday's highs, lows, and so forth. It has fibs, it has zones, and everything's automatically drawn out. The only one that's not drawn out, and it's because there's a glitch in the indicator, which will be fixed in maybe this weekend or Monday, is this one zone does not show up on 1.4. The 1.6 it does show up. But how this works is I'm going to minimize this or bring this down a little bit so you can see a lot of information. And you see a lot of lines, and don't let that overwhelm you. It is not as bad as what you think once you understand what it is. And I will go over each one of them individually and show you how it works. But I'm on Eastern time, so mine is 6 p.m., which would be 1800 hours. This is where the range starts. So as soon as it opens up, you will have a red line and two red lines, a pre-market high and a pre-market low. And what that's doing is it's trying to find the range for you. And on this particular one, we can look at when it opened up, we hit the low. Right there is our low. I hope you all can see this pretty good. We can try to make it a little bigger. And this will all come together here in a minute. It's maybe a little bit confusing at first, but it'll all come together here in just about 15 minutes. So right there is our pre-market low. And this thing measures your pre-market low. It measures your pre-market high. So if we come up here and start looking, there's the pre-market high. The pre-market high was at 8:38 this morning, Eastern time. All my times are Eastern, so when I say a time, just change them according to your time. So at 8:38 a.m., it reached the pre-market high. So I'm going to change this over to, say, a 5-minute chart so you can see more. Actually, that's 5 seconds. We don't want 5 seconds, we want 5 minutes. And this will allow you to see more. So you have your pre-market low, you have your pre-market high, which is up here, the red lines. You can change these colors depending on what you want. I have reasons for my colors. And then you can also look at yesterday's pre-market low and high. So this is looking at levels, and a lot of people don't understand this, but when you look at a open range breakout, everything is really based off of what is going on now in pre-market. So pre-market is like one-time area, and then you have the open, which is we use from 9:30 to 9:40 as an open area, and that's where we determine our open range. Some people call that an initial balance. An initial balance would be your opening where your high and low is. And by having your initial balance, when you break out of that, out of your open range, that is saying that who's in charge. So when it's in between this right here, and let me go to another day just to show you. You can see it better. When you look at this one, you will see the two yellow lines. This yellow line is the open range breakout high, and this is the open range breakout low. So the open range low and the open range high is really where the majority of your trading is going to be initially until they can decide if the buyers are going to be in control or the sellers are going to be in control. So what we do is we take entry one tick under the yellow line. And if I open this up more, you can see the green line here. I know this is a lot of information. I'm going to try to put it all together for you a lot better here in a second. Let's see here. There we go. So our open range low is right here, the yellow line. And our entry would be the green, which is one tick under the yellow line. And again, you don't have to have a lot of money to trade this. You can trade this on micros. You can trade it on minis. You can trade 1 micro, 100 micros, or you can trade 1 mini or 10, 20 minis. It doesn't matter. But that lets you know where you're going to be. Now the indicator does all this. You don't have to draw any lines whatsoever. If you don't want some of the lines on there, you can take them off. And you can add the ones that you want. So me personally, I like to see the open range breakout, the yellow, because that is what you're really looking for. You want to know where this range is. And when it's in here, you don't trade. You just wait. When it breaks out down here, breaks through, you have a buy order or a sell order right here, and you go ahead and get in to sell. And I'm going to go over each trade here in a second, and I'm going to show you where it is today, where it made over $8,000 if you had traded it according to the way I'm going to teach you tonight. So when you break through this, you have different levels you're looking for. And what I'm looking for is the red line. The red line is your pre-market low. That is really my goal to get there. So if you got in here, and let's just say it ended up going straight down there, there's $610 per contract that you would make. Now a lot of people, their goal is to make $300, $400 or $200 or whichever. So if you had this one trade, you would already be out. Now if it goes up high like up here, you would have entered a trade there, and this is a losing trade. You're going to have losing. You're not going to have all winners. And I'm going to show you that here in a second, how the trades work. But in this indicator, you have Fibonacci pivots. You have floor trader pivots. You have risk to reward. You have the Fibonacci lines. You have the open range breakout. It puts your entry line in down here on the green. And it also puts your stop in up here. So all you have to do is initiate the order. And then once you initiate the order, you set your ATM strategy according to, really kind of your strategy you're looking for, how many points back. But if it messes up, you can take and drag your stop and put it right here, and you can put your profit down wherever you want. So in this case, it'd be the red line. So the way this works, and if you have questions, please ask. There's a chat box down there. You can type in your questions, and I don't want to talk over. I want to make sure that everybody understands how it works. But you also have the zones. So let's go ahead and go back to today. And I'm going to go to 100 tick because you can see the candles a lot easier. So let's go ahead and go to 100. And you can trade this on any time frame that you want. It doesn't matter. Time has no bearing on this. It's whatever you can see best. So we're going to assume that you understand the pre-market. It gets the high, the low, and also the middle. The middle is this one right here, this salmon line. So it's the middle between the high and low. This will act as resistance on the high, the pre-market high. It will act as resistance. As you can see today, it opened up, it went over it, come back down, went over it, come back down, went up, over, come back down. In this today, the open range breakout, the high was actually higher the high was actually higher than the pre-market high. Now, when your pre-market high is lower than your open range high, normally you will have a sell-off that day. Not always, but usually you will. So when your breakout happens over the pre-market high, you will end up selling off. Now I use two indicators on here. One is the open range breakout, and I use a mover, which is this red and green line. And the red and green line is like a moving average is what it is. And with the being a moving average, let's see here. Can you all hear me? Because some people are saying that they can't get in. Can someone type that you can hear me? Okay, thanks, David. Let's see. All others can hear me. Sorry about that, guys. So what we're trading is levels, and we're picking our open range breakout depending on what time frame you want. I use 9:30 to 9:40, a 10-minute. Some people might want a 15 or 20 or whatever they want, and you can trade that. You can change it in the indicator. And I'm going to show you the settings here in a minute of how that actually works. So I use a 10-minute because after 10 minutes of trading, you usually know what's going to happen. In this particular case, we never went long here. It went right up to the open range high and never broke out. Our pre-market high is right here, this red line. And when you have a yellow, the open range high over this, like I said, it will normally sell off. Now I'm going to show you two different strategies that you can do on this. The first one I'm going to show using the Ranger indicator by itself, and then I'm going to show you another way that you can make more money using the indicator, the Ranger indicator, and also the mover indicator. This is really sweet too. By far the best indicators on my website, and I have a lot of time in making this and back testing and looking to see what is going to be the best trading strategy with it. I have not, in 3 weeks that I back tested this, had a losing day on NQ, YM, ES, or RTY. Not one losing day. However, there has been losing trades. You're going to have a losing trade. So don't think you're not. Sometimes you're going to have 3 or 4 losing trades in a row. So you have to have the drawdown in your account to cover that. But by the end of the day, it usually makes at least $1,000 usually. There's been a couple times it's made $700 or $800, but usually it will make $1,000 or more by the end of the day. So we've got our high up here, and we come through. This is our middle of the open range breakout. We're still not in a trade. Yes, there's a lot of money here that you could have made, and I'm going to show you that in a minute, how you can trade and get that as well. But let's just talk about the Ranger indicator. So now I'm going to open this up and make it bigger so you can really see the entries and the exits and what I'm doing. So this is our open range low, the yellow line, and then that green is our entry, 1 tick under the open range low. When you enter here, you're not going to wait until it gets down here to put it there. You're going to have you can click your buy stop. Let's see here. You can go ahead and click right here and get sell stop limit. And then you can choose what you want. So if you want forward or whichever. And then when you come over here, you're going to drag on this and you're going to have it on that green line before this even gets here. So when your candles are back over in here, you're already going to have this down here. Because if that drops real quick, you want to be in the trade. So I'm going to cancel that out. So you automatically put it in. You can put it as a limit, which is right here, or a market. A market order, the only problem with a market order, there's good and bad. There's 2 different things. If you do a market order and this comes slamming down real fast, it might enter right here and then pull back, and you might be in the trade lower than where you need to be. A limit, if it comes slamming down, it may not fill. So there's a difference right there. I use a limit order, and I'm in the process of building, because to make an OCO order with NinjaTrader, there's You've got 1, 2, 3, 4, 5 steps to make a bracket order with NinjaTrader. And I'm going to show you how to make one before we hang up too. But there's 5 steps. So I'm going to make a chart trader that fits over here where you can just click on bracket and it will automatically put it in. Then you just adjust them where you want. And that's coming in probably about a month. So we would enter right here. And there's a couple different ways that you can get out of the trade. Now, our ultimate goal, I'm going to show you this, is to go to the pre-market low. That is what our main target is, and that's this red line. Now, if we come all the way over here, you will see that these are labeled. So you'll see OR high, lone stop, PM high. You've got the current day high, and that's also current session high. And then you've got your mid down here. So all of these are labeled, and you can turn those on or off as you want. You can change the colors of them. You can even change the name of them if you want. And this is our risk reward, which we'll get to in a minute. And we've got our pivots, and this is our pre-market mid. So everything is labeled for you. You don't have to worry about trying to find what it is. Now these labels will be with price. So if price is here, those labels would be back here. So you don't have to worry about trying to find your prices and so forth. So let's get back here. All right. I know I'm showing you a lot, but it's going to be helpful to you. If you're watching this, I'll be happy. I'm recording it, and I will be happy to send you the recording. You just have to send me an email so I know who you are. There's a lot of people in here. And just send me an email, and I will go ahead and do that. Yes, David, the bracket order is going to be great. I have huge plans for a chart trader because the chart trader that NinjaTrader has is crap. It's not very good. So this is our first trade for today. We're scared to get in because we don't know what's going to happen, but we go ahead and get in because we know that by the end of the day, we make money. Now, why did I get out here? When you're trading, you're going to have different levels down here. You're going to have a zone that's automatically put on the chart for you. All these zones down through here, the gold shaded areas. And then you've also got your pre-market low. You've also got a previous day low. And you've got these levels here, which are, let's go back over there and we'll see what they are. I can't remember what the color was, to be honest. You have a current session open, so that's where we opened at 6 o'clock in the evening. And we also have the previous day open is right there. So we've got, and there's something else that I can't see what it is, but we've got 3 levels right here, which actually act as a zone, okay? So when you have all of that there, and they're that close proximity, it is like a zone. So our objective is to get to the red line. So when we go ahead and get our entry right over here, when we get our entry, we're going to move our profit target to our red line. That's our ultimate plan, is to get there. And if you would get there, to go from there down to the red line, that is $2,260. Now, we don't always get to that red line in the beginning. Sometimes it just goes back and forth like it did today. But what we're going to do is we're going to take profit as we try to get there. The only time we enter a trade is on this green line. The price has to go up above it, and then when it comes back down, it will get back in the trade. So we don't take a trade on the way up. We take the trade on the way down, on the open range low. Now, the open range high would be the opposite. We would take trades, when it comes down inside the range and then goes back up, then we would enter a trade. So why did I exit right here? I took $85. When it starts coming down and you get to, say, 5 points, you want to bring your stop down to 1 point off of the green line. So in this particular case, we have, let's see, that's 180, so that's going to be roughly, 8 points? I think it is, but I didn't know. It'd be 9 points. 9 points right there. When we get there, we're going to bring our stop down to $20, which is 1 point. This, in case something happens where this went up, and if it spiked up, we would rather take our $20 and get out of the trade, and then hop back in the trade when it comes back down, so we secure, you know, not really profit, but we pay our commission, get just a little bit, and we're not losing money. So initially, and see, this would actually be better if I drew a line. It might help you a little bit. So our stop would be brought down to right here. So while that's going on, we've got our mover indicator on here. This is what I use is a weighted moving average and a 13. That's what I use. You can use the standard indicator that's on NinjaTrader, but it does not have the colors in it. It's much easier for me. I'm a very visual person. It's much easier for me to look at a color change and know that yes, it is rising. Because when the WMA or the WMA starts moving up, it turns green. So when it's rise, it's green. When it's going down, then it's red. And you can change those colors if you want. I use green and red. It's just good for me. I think the default is blue and red. And it actually works really well. You can change those whatever you want though. So as soon as we get a candle that closes above that, we want out. So we would actually get out right here. Our stop, we would end up having it right there. That's where we would bring it down. As soon as that closes, we put our stop there. Because if it closes there and then comes down, oops, sorry. If it comes back down, you know, we want to let it have the trade. So we don't hit our close button. The close is like an emergency. You know, you hit your close on your chart trader when you just want out of the trade, no matter what. That's a market order when you do that too. So when you do that and hit the close, you're actually putting in a market order. Let's see. So here's why we stopped there. It went back up. And once it went back up, we're going to have a market or our limit order right here. It's back on the green line. When it goes back up, we're immediately going to put that order in right here. And then whenever it come in, we'll just use this red line there. It come in and entered. Our stop is going to go back up here. Now our stop is actually prefigured depending on what you want in the indicator. And I choose 60 ticks on the NQ. That's a 15-point stop. And the reason I do is because the NQ likes to move around. So a 15-point will usually allow the price to move around without nuisance stop outs. A lot of people want to use a 5-point or 10-point, and you will see that a 5 or a 10-point will get stopped out quite a bit. So from right here, that is 55.25. And that is 60.25. So that's 5.5 points right here. Well, if you had a 4 or 5-point stop, you would have got stopped out right here. You know, well, I guess this is a bad example, but you would have got stopped out if it would have, say you got into the trade here and it come up and hit that. Like say it, I guess actually this one right here, where this come through, if this candle ended up coming back to here, you would have got stopped out. But having it up here allows for room for it to breathe. You got to have breathing room on NQ because the NQ is a wicked lady. I mean, that thing is just wild. So our first trade is we enter there. We come back. We go up. And as soon as that mover turns green, that is because of this green candle here. We don't want to ride this out because if it goes back up in there, we can secure some profit and then we can get back in the trade again. So you're not looking to get in and stay there all day. You want to, it's kind of a scalping indicator, but it's really for the long haul, but you can scalp it at the same time. So I hope y'all understand why I got in here and why I got out there. Now let's move to the next trade. Our next trade, we went up over top of the open range low. So we immediately put our sell order in right here to go short. Once it hit, which is on this red candle, it came back down and hit it. And then when we come over here, we come down and we come right back up. We closed above the mover, so we take profit again. This time it was $115. Now, if this closed there and then took off, you just missed the trade, or you can try to get back in, but more than likely you will probably miss the trade. The strategy is you only enter on the green dotted line. That's the only time you enter. So now that we went up and we went above, the price went above the yellow line, so we immediately set another sell order right here. Now we get in, and now that we've had a little bit of movement, so far we're up $200. It's 85 plus 115. That's $200. You're up. To a lot of people, that's a good day. They're fine with $200. But at that time, at the same time, if you would have taken profit at the bottom, that's 115. You could have had $290 right here. So you don't have to wait for it to go back up. If you're happy with that, you see this hesitation here. If you see this kind of going across the bottom and not really doing anything, that's a very good sign that we've hit resistance and we're going up. If that is the case, take your profit there if you want. You don't have to wait for it to go up. So you could have had roughly, realistically, you probably had $250 because you wouldn't have got right on the bottom. So there's about $250 there. This one right here, you could have taken profit at 180 was the bottom. You can see this going across, there's 165. The strategy is to go ahead and use the mover bot with it. And by doing that, you will be able to secure some profit. So when you have this roller coaster, you'll secure it. So now let's go back over here. If you went ahead and took the profit at the zone, which that's why the zones are here, you could trade from here to the zone. That's $720. That's a lot of money. Or you're already up that was 115, wasn't it? You can go ahead and take your $200 right here and say, well, I'm up 720 here, but you know what? I think I would just go ahead and leave my stop up here on this level line up here. Now, the reason you might do that is to let it breathe. So what we do is when we go through and we actually bust through one of these levels, no matter which one it is, it don't matter. When we bust through that level and keep on going, we bring our stop right here. So our stop is going to be right across the top of this white line. By being across this white line, when this come down, when it started coming back up, we have breathing room here. But it's hard not to turn down $720. If you're already up the 200 over here, and then you're up 720 here, now you're up almost $1,000, and you've only done one contract. So you're already up $1,000. There's not too many people I know that would not be happy just making $1,000 a day. Most people I work with on an ongoing basis, the majority of them are happy with $500 a day. So at this point, if it comes down to 720 and your goal is say $1,000, take your profit. Just go ahead and take your profit and call it a day. Or you put your stop right above this level line. Now, if you did, your profit would be $405. You're giving up $300 some to go there. But if you bring it down here and take your profit, you're done. You won't ever get another trade until it comes back over the yellow line and comes to the green line. But if you held this and just let it play out and gave the breathing room and had your stop right here above the level, then you would come down and let's just say the very bottom, see that's 945 there. The very bottom is 1,060. So there's your $1,000 that you could have made. But we're going to go ahead and play this according to the rules. The rules would be you go when it's coming down and you bust through your level that is there, depends on what it is. Again, it doesn't matter. When you bust through, you bring your stop to there, and then you just kind of hold out. Up here, you want to use this mover quite a bit because you're real close to going back up and you don't want to lose money. So you're willing to go ahead and take a smaller profit because you just want to get in the game at this point. You need to put some money on the table. On this one, you could actually allow it to breathe. Or you could take your 720 and just wait for the next entry. Or at the end of this video, I'm going to show you a different way that you can trade using both of these indicators and potentially make a lot more. So we're going to go ahead and play this one down. When we went through the zone, you actually have your stop. Well, actually, let me move this back here. You would actually have your stop right here on top of this zone when you bust through the zone. So when you come through the zone, your stop is going to be right up here. So now your stop is here. So what you're doing is you're just stair stepping. You're allowing it to breathe, but you're securing profit so it doesn't just spike up and you don't make any money. So you're actually bringing your stops down with it. And then as you bring it down with it, and you go through this zone right here, usually I like to get through the zone a little bit before I'll bring it down to here. If the price come down to here, I would have brought my stop to the bottom of this zone because that's my next target. But in this case, I had my stop up here because we were real close to the bottom of the zone, and I didn't want to have a stop out so close and then it dropped. But as soon as our candles started going over top of the mover, we went out. So we're going to go over here and we're going to go ahead and get out right there, because when this turns green, more than likely it's going for a ride. It usually don't just go up a little bit and then drop. It's going for a ride. So again, if y'all have any questions, there's a chat box down there. You can put your message in there. I'll be happy to answer your questions. There's a lot of people in here, and I don't want to overlook any kind of messages. So get rid of some of these right here so I can see the messages better. So right now we have secured $945 on this trade because we allowed breathing room. You have to have that breathing room. Now a lot of people right through here, this is all chop. You know, when you have an area like this, and it's just going back and forth in a channel. It's a range, chop, whatever you want to call it. I call it a chop zone, which there's a good way to trade a chop zone. But based on this right here, if we go ahead and wait, and if we break out of that, maybe we went ahead and brought our stop to right there, to where if it broke out of this zone, then we would go ahead and take the profit there. Our pivot line is right there as well. You can see right here, that's our Fibonacci pivot. That is part of this indicator. It's just a matter of turning it on or turning it off in the back. So if you don't want it on, you can turn it off. But if you look back here, it was laying right underneath that pivot. Well, if it's laying underneath the pivot, a good place to be would be right here above this level. And if we're right at this level, if it pops up a little bit above the pivot, we're still good. We're allowing breathing room. So these levels are very important. Now when we come down, we actually took profit right here because of our mover turning green. Now the reason we didn't up here is because we had our level right here. We wanted to allow breathing room for it to possibly go ahead and go through the zone, which it actually did. So if we had our stop up here, we're allowing this breathing room here. As soon as this goes ahead and comes through here, we want to come down to here. So we want to make sure that we're getting through our levels, getting through our zones, and that way we can secure more profit without over trading. A lot of people will say, well, you know, it's getting out here, we'll get out here, and then all of a sudden they'll get into long, then before you know it, they're stopped out here, and then they'll get in a short, and then all of a sudden they're stopped out here, and this chop will kill them. Where if you would just be patient and allow your levels to work for you, then you can actually allow all this breathing room. So then we come over here, and we're not in any trades here because why? We have to be on the green line up here, right below the yellow, one tick below the yellow. We're still not in a trade there. I'm going to drag the stop over so we can keep track of it. Now when this come up and almost hit the yellow line, and then it comes down, I'm going to hop in a short. because when this closed below the mover, and this is the only time that I ever do that, but when it is that close, I mean, we're only looking at 54, so we're looking at a 1 point from right there to there. Well, 1 point to me is good enough, especially when it goes up and we have this big candle like that. We have a hanging man. Not really a hanging man, it's real close to it. Make it bigger so you can see it. But when we have this big old wick pushing down, that means the buyer or the sellers are in control. They're pushing that price back down. And then when we close bearish here, and then we close bearish here, I'm going to be entering on this one to go short. I would have my stop right above this one here. I'd have 1 tick above that. That way if it does reverse, then I'm going to have my stop real close. I'm not going to have my stop all the way up here. That's too far away. Because if it breaks through here, it's going to keep on going up there a good ways. So you're better off to have your stop there. So on this indicator, that's the only time that I ever adjust my entry, is because it got so close to it and then it started coming back down. And if you look at this on a much larger screen, you can see that we had that big drop. We come right up to it, and we've got all these over here. And then we started selling off again. Now this was all chop again. You know, we're back into the chop. No one likes to trade chop. I hate it. Sometimes I'll get in chop and it's just like a living nightmare. And I know not to do it, but I do it anyway, because you know what? We're human. We can't stand not giving up. You know, we want some of that money in there. And the only thing they do is take it from us. So on this one, I would get in at the bottom of this candle when it closed, and then I would take that short. I would have my stop right here. So let's go ahead and move our stop right here. And then as this comes down, and we come up and then we come back down, I would probably move my stop right at 1 tick above this one, because that is making a lower high. And then when we come down, we come up. And we're still in this chop though, so I'm not going to be moving it because I'm going to allow breathing room. We come back up again, we're right there, and then when it starts dropping and we break this low right here and we start coming down, I'm going to go ahead and bring my stop down to right here. And then when we break through this level right here and we keep on going, our stop, we bring it right down 1 tick above it. We always stay 1 tick above. And the reason we do is because sometimes it will come up and retest that particular line, not go through it, but it'll retest it and come down. So, and maybe you want to be a little bit higher even. I mean, it don't have to be 1 tick, but you just want to be real close to this, but above it, to where if it does go up and retest it, it'll come back down and you don't get stopped out. So on this one, we've got our pivot that it was actually laying on. It was bouncing off of the top of this pivot. That's what it was doing. So that was our support as we went through. And we were banking on it breaking through. And usually when you go up to the pivot to retest it, it will usually go above it and then come back down to it, maybe hover a little bit, and then it will just drop. Or it will bounce out, one of the two. So in this situation, we got in, not the perfect entry like the green dots, but we got in. By getting in there, we go ahead and start coming down. And as we come down, we're chasing. We get down to our pivot, we're going to be right there above our pivot. Once we get below this and start going down toward the zone, we get down to the zone, we've got another level right here. So we're going to bring this down to right there. Now we're through this level and we get down to the zone. We're not going to bring that down yet because this may want to breathe a little bit. But as soon as we got down through here, come back up, see how we retested the top of the zone? When we come down to the bottom, then we bring our limit or our stop down to the top of that zone. Bringing it to the top of the zone secures this profit right here. And that's all we're trying to do is just make profit. As this, and we're not doing that until we actually get to this price here. When we broke through here, so if we bring this over to the edge, right here would be the edge of our stop. And then when it comes down, and then we turn green right here, that is probably going to go ahead and come back up there. So we take profit. When we come down and we don't push down below this zone and it starts coming back up, that is weakness in the market. And that means the buyers are starting to try to take control, where the sellers are actually covering their contracts. They're covering their short. So when they start covering, that's a buy order, which means it starts pushing up. We don't want to go ahead and lose this profit from here to here, which is $245. That's a lot of money. Or we could just go ahead and take our profit here at $790. Well, that's a good trade. $790, call it $800, and if you're 5 contracts in, that's $4,000 that you could be making. So when you do that, you're going to be securing more profit, and you're going to get more money out of it. So now let's look at what do we do here. We do nothing. Now, you're going to want to trade it to the top, and I'm going to show you another way that you can trade and get some of that. But right now, we're just looking to break this yellow and then come back through. Once again, we didn't quite hit it right there. But when it starts getting up there and wanting to come down, we're going to go ahead and enter that trade. Okay? So when it comes back down, actually this right here would actually be more like right here. So this will be our entry here, not right at the top. So when we come back down, that's telling us short and we're below this mover. That's a good reason to get in. But look what we did again. We started ranging. Right there is our chop zone. Now, if we have our stop right at the top of this candle, if it comes back up and stops us out, it's not that much money. It's a couple $100 that's going to be from here to here. We don't want to be all the way up here. That's too far. If we come back up to here, it's probably going to keep pushing and we're just giving away more money. But on this one, when we went up and we pushed down, that means that the sellers push that back down and they're not going to allow the price to get back up into that the initial balance, which is your open range. They're not going to allow that. So you stay in your short, you keep coming down. You're, like say you got in at 46, this goes all the way up to 49. So you're about 2.5 to 3 points of drawdown that you're going to be experiencing. Once it comes down, you can actually take profit here, but you got to remember, you've had a really good day. You can afford to have a little loss if you have to. So right now, these are the trades that you don't even have to trade. Most people would already be done by now. So you go ahead and take this, and this comes down. It pushes down here, comes right back up into our chop zone. We get right down there to the zone, and then it pushes up. Well, when it pushes back up, and the mover is green, we go ahead and get out. That's $340 right there. But we could have, and if we put it right down there, just a few ticks below the zone, that's $540. But we're at $340. That's where we ended up exiting. And actually, you would actually exit right there, because as soon as that one closed, then you would close or exit right there on the open of that candle. So it's $360. So the number's a little bit skewed. But it's just a few dollars here and there when you get close to it. So now what do? We do nothing. We just wait. Maybe we call it a day. We've had a great day so far. We don't have to keep on trading. I mean, once you hit your daily goal, you're better off just to go ahead and quit and move on. And that way you're not going to lose the profit that you've already obtained and make stupid mistakes. So then we come all the way back up and we're through the price. So when this goes up and kind of clears it, we go ahead and put our buy order here. We can see the mover's green, so we're not looking to go in short here. We're looking to go in short when that mover is red. So when the mover's red, that's what we're looking to do. So this one, when it goes up, starts coming up through here. Now you could go ahead and put your order there if you want. That would not have got you in. This one right here, when it pushed up, you would have got in there and possibly lost, but you want to watch your price action. You don't necessarily need to get in immediately. You might want to wait for it to hover a little bit and then put it here. So in this one, it went up, started coming down, and we got back in right here. Our mover's red, our candles are coming down, everything looks to go. And then on this one, there's a couple ways to trade this. And I've shown you how getting through the levels and so forth. And I showed you how using the mover for the color change and so forth. On this one, when you've already made your money for most of the day, you can start playing a little bit and maybe trying to go for a little bit more. So whenever you go for a little bit more, you're in right here and it starts coming down. And then maybe you bring your stop up here a little bit higher. Maybe you're going to let it play out. If you hadn't, you could have taken profit down in here, which is 375, but you could have also allowed it to just kind of play around here a little bit. We broke through, we come back down through and broke through. You need to get out, especially on the top of this candle right here. So that's where you need to get out. And then we come back up, we break through, and we're kind of coming through a little bit, and we go ahead and enter a trade right here because it looks like it's probably going to come down. So when you're looking at this on just the candles by itself with nothing out from it, this looks like we've got a top here, we call it a resistance. So yes, I'm going to go ahead and enter here. We've got a high here, a low. We got a lower high there, so I'm going to go ahead and put my entry right here. But I'm going to be tight on my stop. I'm going to go ahead and put my stop a little bit higher. I'm not going to go so far up because I don't want to lose that much money if something happens. So I see my resistance is here, so I'm going to put my stop right on through here so where it's not too far. So we're looking about 4 points, about $80. We're willing to give up $80 for the reward that we could possibly get. So we come back over. And once it starts coming down to this one and push down, we bring it down to 1 point below your entry. By doing that, that will allow you to secure your profit. And when you're in this resistance here, the last thing you want is it to take off like it did here and you just lose a lot of money. So we did $20. We paid our commission. We had a little bit of money, got $15 or $16 out of it. And then all of a sudden, it decides to spike up. And the reason we did that is as soon as this comes down, we're going to put our 1 point stop right here so we can secure something and not lose a lot. Now it went right back up, and when it went up, we go ahead and put our entry there again. If we come back down, we want to go ahead and enter again because it may go ahead and sell off. In this case, it went down. We put our stop at $20, 1 point. It went down. Now, you could have taken profit down here if you wanted, but we didn't. We took it at the 1 point. That is the way this one plays out. So we got a 20 there, and we got the 20 here. So those are 1 point. Now, once it starts spiking up, what do? Nothing. We don't do anything. We do nothing in here. This is the no trade zone, okay? Now, I'm going to show you how you can trade that here in a minute. But right now, this is a no trade zone. And I don't know if you noticed or not, but I've got this on 100 tick with NQ. A lot of people think that's too small a time frame. I kind of like the 100 tick in the sense that NQ moves quite a bit. And when you put it on a 1 minute candle or a 5 minute candle, the candles are so huge, it's hard to see what's going on with how we're trading. So I'm using a 100 tick on NQ. So now we come over here and we've got another entry here. Now I'm going to show you 2 different ways that you could have traded this. We've already made a lot of money. Okay, at the end of the day, we were about $8,000 for the end of the day with one contract. This one you could have played in 2 ways. The first one, you could have just got in and brought your stop down. How we do, when you come down, you're going to go ahead and put your stop right here, the $1 or the 1 tick, 1 point. Sorry, 1 point. And then when it comes up and starts coming down, you go ahead and bring it down to the top of that one. And this is using your lower highs. Every time it pulls back and then drops, that is a resistance area. We come down, we pull up. That's also where our line is here. And then when it starts dropping, we bring it there anyway. So we're now 1 tick above that one. We come down, we break through our zone, and we're going to go ahead and bring it down to here. Now here's another way you can do this. Instead of stair-stepping down like we did before, we're way ahead on money right now. So maybe you want to go ahead and kind of let it breathe a little bit to see what it'll do. So you leave your stop right up here, and you leave it there the whole time. So you've got to stop right across the top of that line, and you're letting this breathe in here. As soon as it starts dropping right here, you can go ahead and bring it down. Okay, bring it down to right at the bottom of this zone. Now, if you do that, now you're securing all of the profit from here up. When this comes back up, we don't hit it, and it comes back down, and we hit this bottom line right here. That's $1,850 on one trade. Now, at that point, maybe you just go ahead and take the profit right there. You're real close to our red line down here on the bottom. Our red line is what we're looking for. We actually hit it over here, but we don't know that it's going to hit it here. We just know that we kept dropping, pulling back, and maybe it pulls back to here and then comes down. But maybe you just want to go ahead and take the 1850, call it a day. Right now it's, 1050. You've only traded for 2 hours at this point. 2 hours, that's all. Not very long at all. So maybe you take your profit right there, or you just go ahead and chase your candles down. Once you start getting down there, you start chasing your candle. And what I mean by chasing the candle is you have a high there, and then when this one comes down, opens there and pulls down, then you go ahead and bring it down to here. And then these come down, then you go ahead and bring this one down. And you keep on going. You're chasing the candles down. When you start getting this much money, you don't have to allow it to go all the way back up here to come back down. So you could chase that down when you start getting that kind of money. And if you would have stopped out right there, that's $1,530. It's a lot of money. And that's per contract. So what I would do is just go ahead and chase this down. Oops, hold on. I would chase it down once I start getting there, and that come up, and then it come down, start coming down, then I would go ahead and move it down here, and I'll make this bigger so you can see it. So I'm going to be chasing these candles down, and then when it starts coming back up, you see this big wick? That is a sign that it's going to push up. Anytime you have a big wick with a small body on top, that is bullish. So maybe you go ahead and once it does that, pushes up, maybe you put it to right there. If you did, that would get you $1,700. So that's a good day. I mean, if you just did that one trade and that was all, that'd be a good day. So another way you could trade this one, I told you there's going to be 2 ways. You could just go ahead and leave your stop right at the top of this zone and just let it play out. I personally would not allow $1,000 worth of play. I will take the profit there every day. I don't need this profit here. I would rather go ahead and take the profit is to lose that extra 1,000. I'd rather have 1,700 as 700. Wouldn't you? I know I would. So, but if you held it there, it eventually ended up coming down here. So there's 2 ways you could have played that because you've already made so much money for the day. Maybe you just want to gamble a little bit and allow more breathing room because you really feel that it's going to go down to the pre-market low, which it did hit today. And if you did that, let's just say that you took profit right on the pre-market low, that'd be $22.60 in one trade. That's a $1,000 contract, and you made $2,260 using this indicator doing that. Now, we bounced off the bottom of this. Usually when we hit the pre-market low, it's going to rage. It'll sometimes go up a little bit, come down and retest it. Sometimes it will go on down. We have our previous day low right here. That's another very strong resistance. And we've also got our zone here. But right here, we've got a zone. We've got a pre-market low. We've got a current day session low. And then we've also got previous day low. There's a lot going on right here. In my opinion, you take your profit and you just let it be. Or you put it right across the top of this zone and you hold it right there. Our target is always the red line. That's what we're always shooting for. But in order to get to that red line, sometimes we have to allow it to take profit beforehand and go up and hit the yellow line again and then come back down. So really it's going to depend on the person. I'm building a bot for this right now. I'm hoping to have the first stage of the bot done in a week to maybe 2 weeks. I'm hoping a week though. And the bot will automatically trade this for you as far as getting in where you want. Your profit targets, you can set it where you want. You can make it go to any of these line levels that you want, the fibs, the risk reward, which we're going to get into in a minute. You can set those targets for whatever you're looking for. Maybe you're just looking for so many points. You can set it for that. You can set it for the ticks or the ATR. There's a lot of different profit strategies that you can use with it. And you can also set a P&L in it, your profit and loss, to where, let's say you just want to make $500 a day. Well, you let the bot run. When it hits $500 profit, it shuts off, and you're done. So maybe it's $500 per contract. Maybe you're trading 4 contracts, and give you $2,000. You can set your P&L for $2,000, and then it would just shut off. So whatever you want to do with it. So what do we do here? Nothing. We're waiting on this yellow line again. Now, when we get up here, I would not be taking these trades, and I did not take these today either. But, when you break through and it come down, it's going to be the same way as before. We went up, we set our entry, and then we went ahead and set it for 5 points. Once we get through and get down close to 10 points, we bring it down to 5 points and hold our stop there to allow it room to go. Now, again, this is the end of the day. So we're just looking to secure some profit. We're not looking to get all, everything that we possibly can. We're wanting to allow breathing room. So on this one, we're not going to exit when the mover turns green. If we did, we would have exited right here. We're going to allow some breathing room for it. And then when it comes down, we're going to have a 5-point stop, which is $100 a contract. And if it comes back up and hits it, so be it. If it don't and keeps going, then we'll start, once we get through these areas of levels of support and resistance, then we will go ahead and start bringing our stop down with that like we did earlier, like I explained. So we end up taking $100 there. We went up, we entered again here, and we did the same thing here. Right there is 5 points. So if you look straight across, we never hit that. So it went up almost to it, and then it dropped again, went up almost to it, dropped again. At this point, when we see a double bottom right here, we want to go ahead and just secure our profit and get out. When we start seeing this chop, you're really better off to get out. You didn't have to. If you didn't want to, you could have taken your 5 points up here and got your $100, but we're at 305. Once we come down and hit this, and then we go up, and then we hit this again, and we don't go through, that's a good sign that we're going to not go through. And this is also a level of support right here that is automatically drawn by the indicator. So now we're going to go ahead and take our profit here because we didn't go through this twice, so we want to go ahead and get out. Maybe you get out a little bit sooner down here, but really you're better off to wait until your mover changes color, and then you can get out. So on this one, you're going to have the same thing you did before. You got right up to it, and then you drop down. So really, realistically, your entry would be right here, not at the top. So your entry would actually be down here. Actually, probably right here is where it would be, because you went up, come down, then you close below, and you enter, and you put your stop right there, right at the green line. Okay, thanks, Dave. Have a good night. So on this one, since we're making high or lower highs coming down through here, we've got a high here, we've got a lower high, we've got a lower high. It kept coming down, but when we come down, we hit our level of support here. This is our pre-market mid, and that is a support level that we're going to have. When this went up and then it come back down, we're going to be looking to possibly go ahead and get out. Maybe you put your stop right here and you would be right above this level of resistance here, the support resistance line. So maybe you got out right there instead. Me, I would go ahead and get out right there. And the reason I would is because we went up, we pulled back, and we started pushing up again. That is a good sign that it's just going to keep on going, and it did. So there's $285, or you could have taken it down here on this when we had this wick right here, and then it pushed up. You could have already brought your stop down to here and been $385. My exit would have been at $280. Again, we've already made a lot of money today, so we're just trying to catch some more. If we can get a few $100s here and there, then that's just more added to the balance sheet. So now we've got this one. We pushed up. We go ahead and put our entry. We come down, and then our mover, we're following it, 115, or we could have had the 5 point at 100, either one. And then this one, we go ahead and push up. We're actually making a higher low here than here. So here, there's our low, higher low. This is pushing up, so we're not going to get in right here now. We're going to wait for this new high. And when we got the new high, then we can go ahead and put this in, because it may go ahead and pull down to where we can make a few $100s. In this case, it pulled down. You're in this trade, or the day's trade. You've made a lot of money. You've got your stop up there. Actually, you would have it right here because it is your higher high. You would put it here, and then you just keep on moving it down. And then whenever this come back up, you put it here. And then whenever this come down, you'd put it here. So right there, when you look across, that is going to be your stop. You'd actually got stopped out on this candle here. It's where you got stopped, because there's your higher high or lower high. So you would have a line right there. And that's where you would get stopped out. By doing that, that's going to help you as far as if you're watching your lower highs and lower lows. That's going to help you know the whipsaw back and forth with this. And then again, we're going to come up. We're going to do the same thing here. On this one, it just kept on dropping down. At this point, we come down, come back up, come down to this level here. We come back up, come back down. So right here, this is like a free trade. That's what I call it, because it's really like midday. I mean, you're only like 12:30 or so in this trade. So when this comes up and just starts playing around, maybe you have your stop right across the top of these right here, and you never got hit by any of this. And then when it comes down, now we made a higher low. So we've got a low right here. We've got a higher low here. So that's a good sign it's going to reverse. So we go ahead and take our profit right down here. Maybe you take it right there, or you can take it there. It's all free trade. But when you make this higher low, that's a good sign we're going to rip. And we did. On this one, we're going to do the same thing. We went up, we put our limit in, we come down. All of these are basically the same. This one right here, we had a losing trade. We ended up, when this come down, we go ahead and bring our stop down a little bit more, only because when this is coming down, like this one come down and it kept going, but this one come down, we go ahead and bring our stop down, and we'll get stopped out a little sooner. But when this green, the mover turned green again, we went out. So the mover is very important in this bot to actually make some extra money with it. Then you've got this one over here, complete loss. But again, the mover turned green, so we got out. That's another $150 loss. We got the same thing here. And honestly, you shouldn't be trading this anyway. When you see all the chop that we've just gone through over here, it's just trading along that open range low. So by trading along that open range low, you don't want to take these trades. And if you do, you want to have really tight stops in case it breaks out like this. Because these trades, if you let the stop go all the way to $300, is going to deplete your profits real fast. So when you're getting into this area and you're chopping like this, better off just not even trade. But if you're going to keep trading, this is how you would trade it. Keep your stops tight, and then you got your high here, you got a lower high there, and then when it comes down, when it starts pulling down, you want to go ahead and bring it down. Try to secure some profit. In this case, there's $70 there with a mover. This one, you're going to have $100, which is going to be your 5 point stop. And then this one is going to be a $105 loss. We actually entered right here on this wick, which was, by looking at it, if you look at it like this, that looks like a good trade. It looks like it's probably going to come down. So yes, I would enter there, but it turns out it was a losing trade. But we kept our stops tight. Once we're coming down and playing along this, we want to keep tight. This one is going to be, when it comes down, you're going to be your 5 point up here. You can go ahead and leave it at the 5 point, take your $100. When it comes down and starts pushing back up like that, again, we're playing this chop in here, so you want to go ahead and start tightening up your stops and taking profit a little bit quicker on it. This one here, we entered again. We started coming down. We started chasing with our lower highs coming on down. We hit our resistance here. When we push through, our stop is going to be right above that white line. So being right above it, we got stopped out at 410. Still a lot of money. It come up and come back down, but we still took 410. That's good money. Again, right here, we're not doing anything because we need to wait on this. When your mover's going up like this and these candles are going up, you want to wait for it to get up a little bit before you take that entry coming down. This one here, you could have entered there, but you would have stopped out immediately. This is not a trade. When you're pushing up like this pretty hard, I'm not going to be looking to go short right there. And then we're going to have up here. Now we've got a open range high, and we have our entry right there. We go up and we come out on our mover. When it starts pulling back down, we go ahead and get out. And that's where we ended for the day. So does anybody have any questions just on this part? And I'm going to show you a different trading way, and I'm also going to show you the settings that we have for this indicator so that you can see how you can turn things on and off. So I'm going to delete these out so we can see more. Actually, I'll just come up here and let's see. If you have any questions, there's a chat box on the part where you, it's like a little square on your screen, but there's a chat box in there you can click on and you can type in your questions. I want everybody to understand how it works, and if I've lost you. Again, if you want to watch this, I am recording this. The only thing you have to do is go on my website, send me a contact. On the contact page, send me an email, and I will send you a copy that you can download and rewatch. Okay, so no questions. So I'm going to go into the indicator. I'm going to show you how the settings work. So on this one, I have two different indicators. This is the version 1.4, and I also have a version 1.6, which is right here. So these are the versions I've made for it. Our newest version that we're using now is 1.4. And the fibs on it are messed up. And I'm going to show you the fibs on the 1.6. But on the 1.6, the time frame is messed up on it. And it'll be fixed possibly this weekend, but more than likely next week. And when it is, then I will add that to the other. And here's the fib level. So if we add these fibs and hit apply, they're messed up right now. He's got them in the wrong place, but they show up on the chart, and you can see that they do play with that. So I'm going to show you the fibs on the 1.6. So how this works is we have U.S. Open. There's actually 5 markets that you can trade. So on the U.S. market, it's 9:30 to 9:40. These are Eastern time. And then if you want to trade the London, it'll automatically go to the 3 and 3:10. And it changes the times for you, so you don't have to, remember anything really. And like Australia is at 8 o'clock at night, so it'll come in at, the 20. And these are military numbers, 24-hour time. So the Australia time is at 8 o'clock at night, and it automatically does that. So only thing you have to do is put those in, or you can do manual. If you're in a different time zone other than Eastern, you can type these in manually and put in what you want. So if you're and I don't know the numbers, but I think, was it Central? I think it's 2 hours behind me. So you would put in 18, and then you'd put 18 here, and then put 15 there. So you would just have to change it according to your time. Now the new one has a time zone up here, and when you click what time zone you're in and what open, it'll automatically change all this. So you don't have to do it. But there's a little glitch in it, so we're working through it. So we've got our open range times. We've got, if you want to show, like say this is your dotted line here, this is your mid. So if I turn that off, it disappears. So if there's certain lines that you don't want on there, you can just turn them off. The ones that are on here right now are very important. I think the fibs are good too, and definitely needed on there. And like I said, when I get my update, I'll have it. You can change the color of this. So like say you don't like goldenrod, if you want blue, you can change that to blue. You can do whatever colors that you want. I like the goldenrod. That's just that's me. And it is by default goldenrod. You can also change the opacity. So if you want it to be brighter, you can make it to where it's brighter. Of course, you wouldn't want it like that. I like just a little subtleness in the background. And then you have the zone area or the open range fib levels. These are the fibs that you can control by these up here. So you can put whatever you want in. These are the default levels. I use 50 and 618 the most. 382 and 786, those are pretty good. But you can change these for whatever you want. There's 8 fib levels that you'll have 8 bottom and 8 top. Then you can change the labels, call them what you want. The pre-market start time, again, that'll depend on your time zone that you're in. The end time is 1 minute before the open of the market that you're trading. So that's what it's going to be for. You want to stop 1 minute before. And you can actually change that to like 59, 9:29, 59, and that would be 1 second before that, because in 1 minute before opening, this could actually change the pre-market level. So 59 would actually probably be better. I'll change that on my update. Then you have pre-market high, low, and mid. This is so you can turn them on and off. These are very important. You want those on there. That's very important to trade from, because we actually trade to the pre-market high and the pre-market low, the red lines. Again, change the labels if you want. Current session start time, it starts at 6 at night, closes at 5. Then you can turn the lines off for the current session. Again, I leave them all on because they're very important. Change the label. The current day, same thing. Previous day, same thing. If maybe you don't want the close on or whichever, but these are 4 very important levels that you're trading to. Now here's the risk reward, and I'm going to show you on the chart what those are as well. So you have the 60. That is your stop. That's this red dotted line. So if you change this to 20, you'll see this come down and that one go up. Now see it come down, and it also changes your risk to reward. So you can turn as many of these on as you want. You've got 10 risk to reward. What is a risk to reward trade? If you're willing to risk 20 ticks, then a 1-to-1 would be a profit of 20 ticks. So this is your red line at 20 ticks. Here's your first green line at 20 ticks. Here's 20 more. So there's 1-to-2, 1-to-3, 1-to-4, and it just keeps on going. So having the 1 through 10 is helpful in order to know where your targets are. Maybe you want to trade a 1-to-5 risk-reward ratio. So you're willing to risk 20 ticks for 100 ticks. So these lines will appear on the screen, on the chart, so you'll know where to trade to. Actually, I'll leave those on. And then you have your long entry. Oh, I'm sorry. I forgot one thing. Your entry ticks. We've got a 1 tick below the yellow here and 1 tick above the yellow there, which is your open range high and open range low. 1 tick is a good spot, but maybe you want it to be 3 ticks below or something. So you can change that. So if you made this, I'll make it a 10 so you can see this green dot move. Now you can see 10 ticks will be right here. So we always keep it on 1, but this is up to you where you want to trade from. The strategy is 1 tick. And you can change the labels of those. So out from the edge where all those are, you can change whatever name that you want on it. I think this is pretty well standard what you'd want. One thing you can do is, I'll go ahead and show you this. Here's our stop, and here's our entry. Here's 1 to 1, 1 to 2, 3, all the way through 10. So I'm going to show you this so you'll see what we're doing with it. I've got this to where you can put whatever you want here. You can put all of it or just some of it. I personally like to have the ticks, the currency on it. So by changing that, I only have the 20 ticks and $100. I like to know where I am as far as with the risk and reward. So this allows you to pick what you want to appear. If you're trading Forex, you'd want pips. You know, ticks wouldn't do you any good, so you put pips. Maybe you don't want this to be on the right side, so you just disable that. It goes away and only shows the label, but it will turn off all of this up here. I like it on both sides. And I don't think we can see it here, but it actually shows on the left side too. So right before pre-open or opening, it'll show it over there, and it keeps on going. So I like to see it on both sides personally, and that's by default what we have it set up. The zones, which is right here, the zones that we have, which in this case would be, I had to draw that one in because on this particular version it don't draw it. 1.6 does. That'll be fixed here in a couple days. I hate to keep saying that stuff, but it was supposed to be done today or yesterday, and didn't quite get it. So we're going to go back over to here. We're going to go back down to the zones. So if you want to change your zones to blue, you can. It'll change every one of them. Again, I like the goldenrod. It is more subtle to me. And you can also change the opacity of it. Here's your Fibonacci pivots, which are these right here. So if I disable them, they go away. And if you want them on, they'll go there. You can also change the width of them. Say you want those to be longer. So you want them to be, say, 60. Then this will be wider now. So you can set them where you want. I think 40 is a pretty good number. And then here is your floor trading pivots. Floor trading pivots is a mathematical formula based on previous day's highs and current day price and so forth. And it's all built in. This is what the floor traders that are at the stock exchange, this is usually what they trade by. To learn more about that, that'd be another video. So, but you can change the size of those. So there's 50, and then if you do, say, 500, then it makes it a lot wider. So actually, let's make that 100. That should be pretty close to the other one. A little bit shorter. But you can make that whatever size you want. You can also decide what you want to show up. You know, if you just want the S1, if you don't want that on, or maybe you just want S1 only and R1, you can pick what you want. You can also change the names of them if you got a certain name you want. And then down here, you can change all the colors of the lines that you want. By default, they are how I like them, and it's up to the person. These zones, you can even trade or change these, see, to where you can have an outside line around them. So on this one, that'd be 50. So I think it's that one right there. We change this one to, say, white, just so you can see it. Must be the top one. But what it does, it puts a white line right here. I'm not sure which one this is, but I think that's on the top one. But anyway, it puts a line on the outside of it. Oops, you can do that. And then you have like your fibs, you can change all the colors of those. Everything's pretty standard. most Ninja Trader stuff. So I'm going to show you one more, and it is the 6. And I'm going to show you how the fibs work, and also how the time zone will work. Now this will be next week when it works, but it will work. It's actually pretty neat. This one you can click manual, and it will do away with all the times, and you just punch in whatever you want. Or you can take this off, and you can pick whatever time zone you're in. I'm in Eastern time, so I'm gonna leave it there. And then it will put it, change these numbers. Right now, when you change them, like if you go to, just go one more, I don't even know where that is. It changes these times. That one must be the same time. Let's see here, Pacific. Right there's Mountain. It'll change this from a 9:30 to a 7:30. Automatically does it. The issue I'm having is this second number. It's not wanting to change it all the way. He was in a hurry. He was taking the weekend off, so we didn't get it finished, but this will be finished next week. So you just pick whatever time zone you're in, which I'm in Eastern. And then when it goes back, it'll put it back to the 9:30 and 9:40. But see how it didn't change this one? So that one it'll be fixed. So that's how it would work though. And you can pick whatever market that you're going to change or trade. You got the US, the London, Hong Kong, Australia, and India. So you don't have to look for the times or anything. They're automatically figured for you. The fib. So I'm going to show you that one on this. So you have fib levels here now. So you've got fib 1, 2, 3, 4, 5, 6, 7, and 8. And you can choose what fib you want those on. Now if you look back over the price, you can see how price trades with those fibs. Now a lot of people have trouble drawing Fibonacci lines. I have courses that teach how to draw them. Everybody struggles with it as far as where to start, where to end. It's just they struggle and they never can get their fibs right. So I decided to put it into this indicator so that you don't have to do anything. It's automatically figured based on the opening session. So these fibs and zones are based off of 9:30 to 9:40, the Eastern or the U.S. Open. It's automatically done for you. You don't have to do anything. And if you notice, look how these fibs are trading to it. If we put them on 100 tick, make it a little bit closer. We come right down to these fibs and hit it again, kind of bounce. We come down to this one, they'll bounce a little bit. They're trading all around these fibs. And that's a lot of lines on the chart, but when you know what these are, it's not so bad. Like if you don't want risk reward, we can turn those off. And those are less lines that if you're not going to trade risk reward, if you're going to trade more levels, which is really kind of the way I trade, you can turn those off and then your green lines are gone. So that's less you're looking at. I mainly trade for my zones. My zones, I get my entry here and I'm going for the zone mainly. And I'm also looking at these levels that we're trading on, but I also want to watch the fibs. So I've got the fibs where they're all the same color so you know what they are. And then these other levels, I've got them marked for reasons for me. You can change those colors how you want. But when you start putting all of this on the chart, it's a lot, but your main thing is your zone and your red line, which is your pre-market low. So when you're looking at your pre-market low here, that is really your main thing that you're going to trade. Now on this one, we have this one I can delete because we have the zone. It actually appears on this version. So now when we're trading this, we're trading levels. We're not trading any indicator per se. Like every indicator is slow. So the price is already moved before the indicator knows it even happened. With this indicator, the Ranger indicator does not work off of uh, the slowness of it. It actually works off of the levels from the past, and the price will trade to those levels all the time. Just like your zones. The zones are pre-built. So we already know where the zone is before we even trade. So when we come over here, this zone was here all day long. And this zone was here all day long. It's never moved all day. Same with these fibs. They never moved. The previous day low, the pre-market low, none of this stuff is moved. So all of these levels were here before the price even got there. So if you're able to use the levels to trade to, you're ahead of the game because the price is looking to go to that level. Same with right here. We went right up to the open range high, and then we pulled back one. We got our mid right here. If you look at our mid, we went up to it, we bounced down, we come up, we bounced, and we went again. So with this indicator, it is not lagging. It is actual real-time levels that have happened, and it is those levels create support and resistance lines. And it's automatic. It happens, without you doing anything at all. The only thing you have to do is decide, what time frame that you want to trade, or not time frame, but time zone, whether you're on Eastern or Central, whatever. And then if you want it from 9:30 to 9:40, or maybe you want to trade to 9:45 or 9:50, you can change that in there. By default, it's 9:30 to 9:40, and it works really well. Also, you have labels. So you have labels here on the side that correspond with these right here. So you can just look over. You don't have to sit there and hold this trying to find what price it is. You can just see that one, look over, and know that it is 244.71. It's actually, that would be 71 because fibs are, the way they work, they don't work off of fives. So I told you I was going to teach you one thing about how you could trade going back to the yellow line. Does anybody have any questions on anything I've gone over so far before I move on to that? If you do, type a little message. I don't see a message, so I'm going to teach you this. So let's say that you have come down to here. This is a perfect example. Perfect example. So we want to trade this right here. How are we going to do it? Well, the first thing we're going to do is decide, did we hit the bottom? Are we reversing? That's the main thing. You need to know if you're going to reverse. So on this one, we come down, we double bottom, and we're on the current day low. We're just below the pre-market low, and we're in the zone. So right here, I would not be trading. I would want to wait, because this could easily come up and then just come right back down to our previous day low right here. So we've got a previous day low, we've got a current day low, we've got a pre-market low, and we've got a zone. There's a lot of levels right here that says that is a major support area. And having a major support area, we're going to be looking to go long. So we're going to go ahead and use this mover along with these levels. So when we look at the mover, we go up, we come up, we made a new high. So we've got this high right here, and we broke that high. We don't get in on the first breakthrough. We want to get on the next one. If you get in on the first one, a lot of times it will hit it and immediately come right back. So now we have a low here, we have a low there, and this one is a higher low. So let me try to make it a little bigger for y'all. So now we have a higher low. So now when that pulls back, we're going to go ahead and move it back up because we have a higher low. When we have this higher low, that is a good sign that we're going to be in reversal. But we're still not going to enter a trade yet. We're going to wait until we break this high. So now, right here is our high for there. We want to enter right here. The first one, we have our high, lower high, then we have a higher high. The first one that we get, we do not trade. We wait till the second one. So this is our, when we broke through, and then we got a new high here. So this will be our second high, and this will be our third going through. So our entry would be right on this wick right here. We would have our buy order in right here to go long. When we do that, our stop is going to be determined really based on like 60 ticks. If you have 60 ticks on the NQ, that allows the room. So 60 ticks would be from there. Oops. Right there, it's $300. There's your stop where it's going to be. So you're going to put your stop right here. Now, if it were me, based on this, based on this, I would not go that far down. And the reason I wouldn't is because we have support levels here. There's a zone. So I would bring it down where we have this one wick coming through. These support levels, I would bring my stop one tick below this wick right here. By having one tick below this wick and below your support, if we break through that, it's going to keep on going down here. So we want to keep a tight stop on it, and that's going to be roughly $150. So there's 56.5, and it says 9 points, so you're looking, what, $180 is what your stop's going to be. As this starts going up through here, again, your entry is going to be right there. That's going to be your entry. As this keeps on going through, you know, maybe you don't feel comfortable with it, you take profit up here, that's fine. You know, you're going to get a couple $100 out of it, or you just keep on waiting because we think it's going to go back to the yellow line. So we go ahead and hold it, and this thing takes off, and then we break this high. You know, we get up here, and then it pulls back. When it pulls back, we've still got our target, our stop right here. And then when it pulls back, we make a higher low, and then it starts going up. So now we're going to bring our stop up to here, and then we're going to wait on this one to go ahead and go where it needs to go. So this one made a higher high right here. And then we're still going to keep our stop here, or if you want, you can take your profit up there. That's a lot of money there. So for here, you would actually have $555. But again, we're trading back. We think it's going to keep on going. We're going to work off these higher highs and higher lows. When it pulls back and then starts going back up, then we bring our stop up to here. When this breaks through and keeps on going up, then we're going to be right here. Okay? Because we pull back. When we pull back, that uses that high. And then when it goes up, then we're going to go ahead and come up to here. When this goes on up, we're going to go ahead and wait. When it pulls right to here, starts going up, we move this up because that is a higher low. So by doing it this way, we made $630 per contract. That's a good trade. And the only thing we did was use the higher highs and higher lows going up. Now these were big drawdowns. Well, it wasn't really a drawdown because you were in profit the whole time. The only time you were in drawdown is from here to here. And once it broke out of there, maybe you went ahead and took profit up here. Maybe you brought your stop up to this, fib level. You can do that if you want. But if you're looking to trade all the way back, this is how you would handle it. You would not leave your stop here and then hope you don't get stopped there. There's a lot of money right there you'd be giving up. So once you hit this one and then this pulls back and then takes off, you want to go ahead and bring your stop up to here. These right here are not really pullbacks, but if you wanted, you could go ahead and chase it up with these. But right here is really where your stop ought to be. And then when it pulls back again, then you do it again. It goes up, comes down here, and when it goes to take off, you put it there because this is a pullback. If you're looking at this like this, and it goes up, and then you pull back, and then it starts going up, you can see that this right here would be the pullback for that. So you would bring this stop to right here. And then as you come over, you don't know that's going to happen. All you do know is that come down, and then when it went up, your mover turned green. That is a good sign that this is a reversal. You bring your stop up there, and you get stopped out there. If you wanted, you could have played it to the zone. I love zones. Usually when you get to a zone, you are going to reverse. So in this particular case, when we went up there, you could have brought your stop all the way up to the bottom. Once we start pushing up, you could have brought your stop there. You could have played it either way, and that would have been $850. If you're this far into it, I might leave my stop there just to allow it to kind of play, but when it pulled back and then went up, I definitely would have my stop here. So that's how you trade with the higher highs and higher lows. Now, once this starts pulling back right here, and we went up and we started pulling back, I do not get in this trade right here. I'm not looking to get in that. You could play the mover and get in, but this is a bullish run. I'm not looking to short a bullish run. That's like a lot of people want to short this right here. There's one person in this group right now. He would short this. I know he would. And it's not where you need to short because you're in a bullish run. You don't have to get all the points in all this. You just need to try to capture the longs when you're on a bullish run. Now, this one, we did not make a lower low. Right there's our low. We did not come down and hit it, so we would be looking to go long. If this had broke this, I would be looking to, and when it pulled back and then shorted again, I would be looking to short again. But at this point, until we break this one, I'm not looking to short. I'm still looking bullish. So on this one, we come down, we start to kind of, messing around right here a little bit and just doing a little bit of ranging. And then I would be wanting to get in on this candle here. When this mover turns green and we have a closed green bar, I'm looking to get in and go ahead and play the same game we just played. So I would be looking to get in right here. And then I would have my stop at the bottom of this one. Because if we get in here, if it goes through here, then it's going to keep going. So I'm going to have my stop here. When this starts going up, I'm going to go ahead and bring it up here to break even, like 1 point above. Just to capture anything. If it would spike down, then it would get me. Or I would stop out ahead of time. So I get 1 point above. When this pulls back and then takes off again, my stop is right here. See what I'm doing? It's just stair stepping and I'm keeping my stop. So on this one, we would have got in right here. And let's just put it up here. As long as this mover is green, I'm not getting out. So my stop would be right here because of the mover. Now you could have traded to the yellow line, made $1,410. But what if it just kept on going? So we go ahead and get out when it reverses back and breaks down below the mover and closes, we get out. That's $1,300 in trade. And that's how you can trade once you get to the bottom and you want to trade back. It's working the higher highs and higher lows. Two things. I'm building an indicator that will show those higher highs and higher lows. It's going to be a few weeks before it's done. It's already in the works. I've also got a channel that we're building that actually draws the channels in. This is a drawing tool that I have right now that is going to be on the website here real soon. So the drawing tool will be available here maybe this weekend, so that you can draw this. Now the way it works, I'm not going to get into that tonight. That's too long. We've been on here a long time tonight already. I'm sure a bunch of you are tired. But this is, once we break out of this channel, that's when we decide that we may need to go long. That's the way channels work. So do y'all have any questions for me or anything? There is a discount if you want to buy this indicator. There's actually two indicators, and I'm going to show you where they are. And let's see here. Let me do Google Chrome. And I'll show you where you can buy it, and I'm going to give you the discount code. Let me find that discount code. I've got the code for tonight. And if you have questions, if you need to talk to me about it or anything like that, just let me know. Let's see here. The discount code I just posted in the chat is And that would help you. That works through midnight tonight. And where you would go is go up here to the top, just type in mover, and here is both of them. They're $11.99 for both indicators, but you can save 30% through midnight tonight, and that will get you down to what's that, $360 knocked off from it. And if you want to know more about those, only thing you have to do is come down here. You can click on the mover right there. And if you want to buy the mover separately, it's $4.99 less the 30%, so it's roughly $400. And then if you want to buy just the Ranger indicator, the Ranger indicator is $7.99. There's a lot to the Ranger indicator. You have zones, fibs, you have the open range, you have the previous day, the pre-markets, you have the risk reward. There's so many things involved on this. So really it's like buying, I mean, this ought to be more money, and probably the first year I will raise the price on it. But this should be a lot more money because there is 6 or 8 different indicators in it. So you're buying one indicator for all of it. Here's a small video on it. I'm going to update this video because I've got new stuff on it now. But the only thing you'd have to do is add it to your cart, and then when you add it to your cart, then let's see here. Let's see here. Go back. Log out. If you add this one to your cart, there is a coupon code right here. You just type that in, the one that I just sent you. And when you type that in, apply the coupon, and it will discount off of that. That is through midnight tonight. Again, if you have any questions on it, let me know. This indicator, there's been a couple people that have asked me, can I trade micros on this? You most certainly can. And I'm going to show you that. If you just go to micros, MNQ, and it loads up, and it is the same thing. Now, any updates that I do to this indicator, or any indicator as far as that goes, are free. I never charge for updates. They always come with the indicator. And what I do is whenever I do an update, I send out an email to everybody that has purchased it, and then they can go ahead and go to the website, and you just re-download it, delete off your other one, and install your new one. So it's really easy to do. Does anybody have any questions for me? You have the coupon code that's sent in the chat. If you didn't get that, let me know. Also, if you want a copy of this video where you can watch it later, send me an email. If you go to the, let's see here, if we go, where is that thing? Let me find it again. I think I deleted it. You go up here, go to contact, type in your name, email, phone number. If you want me to call you, just put the message in, whatever you want me to do. Send this, and then it comes to me. I'm the only person that sees this. I'd be more than happy to help you. Whatever it is that you need. So if there's no questions, I am going to go ahead and hang up and stop this video. You guys have a great day. Thanks for joining in. Again, any questions, let me know.